Hello students, welcome back to Accounting 1303, Introduction to Accounting 1. This is Dr. Mercado, and in today's lecture we're going to be covering content from Chapter 13, which deals with accounting for merchandise inventory. The specific problem I will be covering with you today is problem 13-6A. It's a very comprehensive problem, so it's going to take us a little bit of time to solve it. It is a little bit long, so be patient. But I do want to cover this problem because it basically goes over 4 of the inventory valuation methods explained in the chapter, and hopefully it serves you to complete your other homework assignment as well, aside from this problem. So the problem that we're going to be working on today deals with the 4 different inventory valuation methods. We've got FIFO, LIFO, specific identification, and weighted average methods. Okay, so I'm briefly going to go over just a brief overview of each of the methods. And remember, it is your responsibility to ensure that you read the entire chapter before you begin working on your homework. Okay, you cannot skip that. The textbook has wonderful examples of how to complete each of the inventory valuation methods. It has explanations, so please do not skip that step and read. Okay, so the first one we're going to do is FIFO, first in, first out method. This is a widely used method for allocating merchandise cost, and it basically assumes that the first goods purchased were the first goods sold. Therefore, the latest goods purchased remain in inventory. So to me, when I think about FIFO, is the first one in, first one out. I sell my old, I keep my new. Okay. LIFO is the opposite. This is last in, first out. This is the 4th of the allocation methods covered in the chapter. It assumes that the sales in the period were made from the most recently purchased goods. Therefore, the earliest goods purchased remain in inventory. So last in, first out, it basically tells you that you're going to sell your newest inventory and you're going to keep your oldest inventory. The last ones in are the first ones out. You sell the new, you keep the old. The specific identification method is an inventory method used for items that are physically different from each other or that have serial numbers. This might include cars, motorcycles, furniture, appliances, jewelry, anything that you can identify by a number. You can use specific identification. This is basically used for the higher end items. For example, we're not going to be using special identification method to keep track of the number of ramen noodles that we have on the shelf. No, we've got tons of ramen noodles. They're not valued very highly, so we're not going to use specific identification for that. But if we are figuring out the inventory valuation for Rolex, for example, there's 10 Rolex in our jewelry store, then each Rolex has a specific serial number assigned to it. It's expensive. We will be using a specific identification method to account for the Rolexes in that case, okay? And the weighted average method, that is a method that is used that is based on the average cost of identical units. The key here is that the units need to be identical. It needs to be the same product. Now for this one, it's a formula. We're going to get the cost of the units available for sale divided by the units available for sale to give us our weighted average cost per unit. Okay, we're going to be practicing the calculation of all 4 inventory valuation methods in the next example. Okay. So, like I said, the problem is a little bit long. We are going to be doing specific identification, FIFO, LIFO, and weighted average. So we've got swing companies beginning inventory and purchases during the fiscal year ended September 30th are as follows. So they give you the beginning balance and then the different purchases made throughout the year. Okay, at the end of the year, we've got 4,000 units that we've purchased at a cost of $95,600. It says use the following information for specific identification. So they give us specific information for the specific identification. It says that there are 1,300 units of inventory on hand, which is remaining that we have not sold as of September the 30th. Okay, and then they give you information. This will only be used for the specific identification. Okay, what are we required to do? We are required to calculate the total amount to be assigned to the cost of goods sold for the fiscal year ended September 30th and the ending inventory on September 30th under each of the following inventory methods: FIFO, LIFO, weighted average, and specific identification. Okay, so I've got my table set up. So we're going to start off with FIFO. Okay, so for FIFO, you sell the old, you keep the new. Okay, so I like to work on these problems backwards. Okay, we have to solve for two different things. We have to solve for our ending inventory. This is the ending inventory over here, and for the goods that we've sold. Okay, so I need to be able to figure out, okay, which of the items do I still have in my ending inventory? Once I figure that out, then everything else that I had purchased must have been sold. Okay, so what I'm going to do is I'm going to go ahead and I'm just going to enter the dates. Okay, we've got October 1st, October 18, and then we're going to go ahead and enter the amounts. October 18, November 25th, January 12th, March 17. Okay, June the 2nd, August the 21st, and September 27th. Okay, so now what I'm going to do is I am going to figure out, we've got two different things that that we need to solve for. Okay, so I've got my cost of goods sold, and I'm going to put that in one color, and I've got my ending inventory. Okay, remember, the ending inventory is what we have not sold. The cost of goods sold is what we've sold. Okay, so let me delete a couple of these. I don't need that many. Okay, so I know that according to the problem, we've got 1,300 units remaining. That is going to be your ending inventory. Using the FIFO method, I sell the old, I keep the new. So we need to know that we're keeping the newest. So when I am looking at my cost of the ending inventory, I know that I'm keeping my newest 1,300 units. That is the units that we have on hand. So if we are going to keep 1,300 of the newest units, which units would that be? So we're going to go, October is my oldest inventory. September is my newest inventory. If I'm keeping my newest, then I know that I'm going to keep those 700 units that we have, and we paid $27 a piece. And let me go ahead and put commas on all of this. Okay? For the units, I don't, just for the dollar amounts. Okay, so I need 70 units at 700 units. I'm sorry, 700 units at 27 a piece. So I'm going to multiply them, okay, to get my ending inventory amount. So those units are valued at, let me see, 18,900. Okay, that's 700 units. Remember, we're accounting for 1,300. We're going to go up to the second newest units, which are those from 200. Okay, so I've got 200 units at $26. So that's going to give me, we're going to multiply it, 5,200. So now I'm going to get my calculator out. Remember, we've got 1,300 units remaining. So I've got 700, which is the newest, plus 200, that's 900. I still need 400 more units to reach my 1,300. So I'm going to look at my next batch, June the 2nd. I've got 800 units. From those 800 units, I only need 400 to be able to complete my 1,300 units at my ending inventory. So I'm only going to pick up 400 units, okay, at $25 a piece, okay. That is going to be 10,000. Okay. So now let's sum this up. This is what we have left over. This is what we have not sold. The problem says that we should have 1,300 units, okay, which we do. And those 1,300 units are valued at $34,100, okay? Okay. So, remember, we always want to match to 1,300 units, okay? So we've got 1,300 units. They're valued at $34,100. This is what I have left over. This is what I did not sell. Now, everything from this point up, we've sold. that is going to go under our cost of goods sold. Now for that line item for June the 2nd, I know that I had 800 units, okay? 400 I did not sell, so that means that I must have sold 400. So I'm going to have 400 units at $25, and we're going to multiply. That's going to give me 10,000, okay? So now from this point up, okay, and I forgot to enter the descriptions. This is my beginning inventory. This is the first purchase, second purchase, third purchase, fourth purchase, fifth purchase, and seventh purchase. So if we look at the information, we kept everything from the seventh purchase, everything from the sixth purchase, and half of the fifth purchases, because remember, I only needed to complete 1,300 units because that's my ending inventory. From that fifth purchase, I had 800, 400 I'm keeping. That means I'm selling 400. From that point forward, anything up has been sold. So on my fourth purchase, I have 900 at $24.50. Okay, and I'll do the math later. And then I've got 300 at $23. All of these have been sold. Then I've got 200 at $21.50. And then I've got 500 at $20.50. And then I've got 400 at $20. Okay, so what we're going to do is we're going to multiply the units times the unit price. Okay, and I'm going to bring that down. So these are all of the amounts. Now I'm going to tally it up. Okay, and let's see how many units we sold. Okay, so we sold 2,700 units. Let me put this. Okay, so we sold 2,700 units, and the cost of those units was $61,500. So if you get your calculator, okay, we sold 2,700 units, and we have in hand 1,300. That gives me my 4,000 units that I had. So from the 4,000, we have to split it up. Okay, how many units of the 4,000 did we sell using FIFO? These are the units, the one in orange. These are the units I've sold, okay? I'm selling my oldest units. I'm keeping my newest units, okay? So I'm keeping 1,300. These are the 1,300 units I'm keeping. These are my newest units. Everything else is sold, okay? So these are the dollar amounts and the quantities that we have for the cost of goods sold, the units that we sold, the cost of the ending inventory. That is the goods that you have not sold. You have 1,300 available, valued at 34,100. So because I am using Excel, I'm just going to copy the date and the description to save some time. Okay, so now let's look at LIFO. For LIFO, we sell the new, we keep the old. Okay, so now for LIFO, I am keeping my oldest units. Okay, so I have to figure out which of my 1,300 units that I have I'm going to keep. So let's figure out the cost of our ending inventory first. This is what we have not sold. This is what we have available. Okay, remember, we've got 1,300 units. We are selling the new, and I'm keeping the old. Right now, I'm calculating the cost of the ending inventory, which is what I'm keeping. So for my beginning inventory, I had 400 units at $20. Okay, that's 400. And then on my first purchase, I've got 500 units at $20.50. That takes me to 900. I need to come up with 13. After that, I'm going to have 200 units at $21.50. So how many do I have there? Okay, I've got 400 plus 500 plus 200. That's 1,100. I need to reach 1,300. So I still need 200 more units to go. Okay, so Let's look at the third purchase. On the third purchase, I have 300 units. I don't need all 300. I just need 200 to come up with my 1,300 that I have total. Okay, so I've got at $23. Okay, so now we're going to do the math. We're going to multiply the units times the unit price. Okay, and because I am using Excel, I can easily calculate the information. Okay, so now I can get my total. Okay, so I'm going to sum up my total units. Remember, we need to have 1,300 here. These are the units we have not sold. Those 1,300 units are valued at 27,150. Okay. Now they're valued less because I am keeping my oldest units, and usually how markets work is as time progresses, the prices go up. In the FIFO method, because I'm keeping my newest units, the prices are higher. In the LIFO method, because I'm keeping my oldest units, the prices are lower. Thus, the ending inventory is going to be valued less than if I were using the FIFO method. Okay, so I've got my 1,300 at 27,150. Now, from that point forward, everything else I'm selling. Let's go back and let's focus on that third purchase. On that third purchase, I had 300 units. Okay. From the 300 units, I am keeping 200 for my ending inventory, which means that I am going to sell 100 units. Okay, it'll be 100 units at $23. From that point forward, everything else is going to be sold. Okay, so on my fourth purchase, I've got 900 units at $24.50. On the fifth purchase, I've got 800 units. So if we look at the fifth purchase, let's look at the data. On the fifth purchase, I've got 800 units at $25. So I'm going to have 800 units at $25. On the sixth purchase, I've got 200 units. So we're gathering the data from here. 200 at 26, 700 at 27. Okay, so we're going to have 200 at 26 and then 700 at 27. So now I'm going to get the total. I'm going to multiply the units times the unit price. And that gives me those dollar amounts. Now I'm going to tally up the total. Okay. So the number of units I have not sold should be 2,700 units. And that is correct. Now those 2,700 units that I've sold were valued at, and I put it on the wrong one. Let me move it up here. Okay, so I've got, didn't I? Okay, I didn't add that one. Let me add it up. There we go. Okay, so for my units, I have 2,700 units that I've sold. Those 2,700 units were valued at 68,450. Okay, so the units that we sold, there we have the same quantity, but the dollar amount is higher. Why? Because I'm selling my newest inventory, which is more expensive. Okay, so remember, on the LIFO, you sell the new, you keep the old. So I'm selling my newest inventory, and this is what we're keeping. We're keeping the oldest inventory. So my 1,300 units that I have at the end of the year are 1,300 of my oldest inventory. Okay, so just keep that in mind. Let me go ahead and highlight this. That way we can see the difference. This is for my cost of goods sold. Okay, and then this is my ending inventory. Okay, remember, your cost of goods sold is an expense. Okay, this is what you spend. The cost of the ending inventory, it's in the asset. It's an asset account. It belongs in your balance sheet. So cost of goods sold belongs in your income statement. Cost of ending inventory goes in your balance sheet. Okay. The third method that we have is the weighted average. Okay. So for this one, we're going to have to calculate the average cost per unit. Okay. So to calculate the average cost per unit, we're going to get the total cost. Okay. How much do we pay for all of the inventory? We paid $95,600. Okay. We're looking over here at the $95,600. So we spent 95,600 to get a total of 4,000 units. Okay. So that's where we're picking up our numbers. The total cost divided by the total units. Okay. Total cost divided by total units. Okay. So total cost divided by total units. So if we do the formula, that will be a total cost of 95,600. We're going to divide that by 4,000 units. And let's see what that gives us. So we've got 95,600 divided by 4,000 units. That's going to give me $23.90 per unit. Okay. So now that we've got our average cost per unit, I can go ahead and calculate my ending inventory. Okay. Now for the ending inventory, we know that we have ending inventory, we've got 1,300 units. We're going to multiply that by the rate at 23.90. And then that's going to give us 1,300 times 23.90, $31,070. This is how much your 1,300 units in ending inventory is valued. Okay. The next thing we're going to do is we're going to calculate the cost of goods sold. This is what you actually sold in goods. Remember, according to the problem, we had 4,000 units. We have 1,300 remaining. That means that we must have sold 2,700 units. So we're going to get the 2,700 units, and we're going to multiply by the average cost per unit of $23.90. And then that's going to give us 2,700 times 23.90. That's going to give me 64,530. So this is what we're trying to calculate, okay? We're trying to calculate the value of my ending inventory using the weighted average method and the value of my cost of goods sold using the weighted average method. Okay, I've got 1,300 units remaining at 23.90. That is what we calculated. Cost divided by total units. That gives me 3160. In comparison to LIFO and FIFO, for LIFO we've got 27,150. For FIFO we've got 34,100. This is the weighted average. It falls in between the two. It's the average kind of like of the two systems merged into one. Okay, the cost of goods sold is what we sold. We have 2,700 units. So if we compare it, we go from 68,450 to 61,500. This number is in the middle. Okay, so it's in the middle of the two. So the weighted average method gives you kind of like a midway or a midpoint. If you don't want to use LIFO or FIFO, weighted average gives you the middle amount. Okay, so let's do the first one. Okay, the last one that we have, which is a specific identification. Give me a second here. Okay, so let's see what we have to do here. Okay, so the specific identification method is the last one that we're going to be handling, okay? So it's very similar to the one we were doing. I'm going to go ahead and I'm going to hide all of this because I'm going to need information from the problem. So I want to make sure I have it available, okay? So the last one we have is the specific identification method. Now for the specific identification method, we are going to be using the information provided to you there on the bottom, okay? Excuse me. So we're going to use that information. We've got 1,300 of inventory on hand. Of these 1,300 units, so they basically tell you what we have on hand. Okay, so let me see. Let me rerun the numbers just to make sure. I've got 100 plus 200 plus 100 plus 400 plus 200 plus 300. Yes. So they're telling you what you kept from each of the batches. Okay, so this is what you kept. The difference is what you sold. Okay, so we need to be very careful here. Okay, let me unhide just so I can copy this information. Okay, so let me copy it over. That way I don't spend much time typing it out, guys. We're just trying to be efficient. Now that I've copied it over, I can hide it once again. And we can go to town to solve it. Okay, so let's look at our beginning inventory. Okay, our beginning inventory was not touched. Okay, so we're gonna keep the entire 400 units. That is what is sold. So we didn't keep anything from our beginning inventory. If we didn't keep it, then that means that we sold it. So at the beginning inventory, I had 400 units at $20. Okay, so that we are going to sell. Okay, remember, we are only keeping these down here. Now let's look at the first purchase. Okay, let me get the total so we can be calculating as we go. You multiply the units times the unit price. Okay, now on the first purchase, I have 500 units. From the 500 units, I am keeping 100. Okay, so if I'm keeping 100, that means I must have sold 400 at $20.50. And if you multiply it, okay, it gives you 8,200. So if we had 500, we're keeping 100. We're going to put the ones that we're keeping on this side at $20.50. So we're going to multiply them. So the 100 that we're keeping is going to be 2,050. Now let me just format this real quick so it can look a little bit cleaner. Okay. There we are. Excuse me. Okay, so we need to be very careful here. They're telling you from each batch what you're keeping. So from the first purchase, I'm keeping 100, which is what I have here. I had 500, I'm keeping 100. That means I must have sold 400. From the second purchase, I didn't keep anything, so I sold everything. So from my second purchase, everything that I had, I sold it, $21.50. Now from my third purchase, I kept 200. So I'm going to look at my third purchase. I had 300. Out of the 300, I am keeping, we're looking at the third purchase, I am keeping 200. Okay, so I'm keeping 200 at $21.50. So if I'm keeping 200, then I am selling 100 at $21.50. So we're splitting the third purchase between what we're keeping and we're selling. The problem says you're keeping 200, which is what I have here. We have a total of 300. That means the difference of 100 is going to be sold. Okay. On the fourth purchase, I've got 900. From the fourth purchase, I'm only keeping 100. So from the fourth purchase, I am keeping 100. My fourth purchase, they're at $24.50. Okay. So remember, on the fourth purchase, I've got 900. I am keeping 100. That means I am selling 800. Okay. 800 at $24.50. Okay. So the fourth purchase is being split. 800 is being sold. 100 is being kept. Okay. From the fifth purchase, I've got 800. From the 800, I am keeping 400. So I am keeping 400 from the fifth purchase at $25. Okay. So if I'm keeping 400 and I had a total of 8, that means I sold the difference of 400. Okay. The totals are automatically populating because I ran my formula down. The total is basically just your units times your unit price. Okay. From the sixth purchase, okay. From the sixth purchase, I've got 200 units. On the sixth purchase, it says that I'm keeping all of the 200 units. So from the sixth, I am keeping the 200 units at $26. Okay, so that gives me 5,200. From the seventh purchase, I am keeping 300 units. So on the seventh purchase, I have 700. From the 700, I am going to keep 300. Okay, 300 at $27. Okay, so if I have 700, I'm keeping 3. That means I must have sold 400 at $27. Okay. So now we're going to tally it up. Remember, we need to come up with the same amounts that we had for the other two methods. Remember, we had 4,000 units. 1,300 were not sold. That is our ending inventory. That means we sold 2,700 units. The cost of those units we sold was $63,050. Okay. Now for the units that we did not sell, we should have a total of 1,300 units. Okay. And the value of those 1,300 units that we have in our ending inventory, which we have not sold, tally up to 32,000. Did I add up all of them? Let me see. 46. Okay, this one's 200. Okay, this one was the third purchase. Okay, this one should be $23. I put the wrong amount. We need to be very careful on the prices. The third purchase is $23. Okay, so we've got $23, $24.50, $25, $26, and $27. Okay, we're good. So for our specific identification, we've got 1,300 units valued at $32,400. Okay, so this is our total. So using the specific identification, let me unhide. Okay, so now we have all of our work. Okay, we've got our cost of goods sold. Okay. So I'm just gonna do a little table here for FIFO, and then I'm gonna do cost of goods sold, okay, and then ending inventory. That way we can compare. Okay. So for cost of, and I put it backwards, cost of goods sold. There we go. So for my cost of goods sold for FIFO, I've got 61,500. For my ending inventory, 34,100. Okay. The units are the same. This is 2,700 units. This is 1,300 units. The units do not change on the number or the method used. The units will always be the same. My cost of goods sold will always be 2,700 units regardless of the method. My ending inventory will always be 1,300 units regardless of the method. Okay, so I'm just doing this table so we can figure out the difference. Okay, so we can have it side by side. For my LIFO, my cost of goods sold was $68,450. For my ending inventory, it was $27,150. Okay, for my weighted average method, okay, for my weighted average, my ending inventory was $31.70. And my cost of goods sold was $64,530. Okay. And then for the specific identification, I've got 63,200 and 32,400. Okay. So if we look side by side, the different four methods, regardless of the method that we use, we sold 2,700 units and we kept 1,300. Now, if you look at the valuation of our cost of goods sold, it varies based on the method. The same thing for my ending inventory. The one that yields the highest value for your ending inventory is the FIFO method. Okay? The one that yields the lowest value is the LIFO method. Now, when we're dealing with cost, LIFO yields the highest amount, FIFO yields the lowest. The weighted average gives you an average of all of the methods. It's basically an average of all of the cost divided by the total number of units that you purchase. So it gives you an average. It does not take the time consideration factor into place because we're getting an average. Okay. And for the specific identification, those are items that we specifically identified via a serial number. So we know exactly what we've sold and not sold based on those serial numbers that we have. So it's a lot more efficient and it yields the most appropriate or the correct amount of your inventory valuation. It's just a little bit more time consuming because you do need to track it based on serial numbers and then by period, how many of each. Let's look at the specific identification. How many from each of the purchases that we sell or keep? Okay, so we kept 100, we sold 400, we kept 200, we sold 100. So it's just a little bit more time consuming because we have to identify from each purchase what was sold, and what we kept. And it's not based on timing, it's based on actual purchases. Okay. The FIFO and LIFO based on timing. Okay. You sell the old, you keep the new for FIFO. For LIFO, you sell the new, you keep the old. Okay. So these are the four methods. We've run through the calculations. We've figured out the cost of goods sold and the ending inventory values for all four methods. Please practice, okay? The more you practice, the better you're going to get at it, okay? So that's what all they're asking us to do. We've already done the 4 steps. We've got all of the information. It's just a matter of understanding. Talk to yourself, okay? This is inventory. What am I selling? What am I keeping? And that's just going to make it a lot easier for you to organize your thoughts and your ideas when you fill out the tables, okay? So that is it for this lecture. This is a very comprehensive problem. It goes through all 4 inventory valuation methods. I hope it is useful because I believe you will have something similar to this on your exam. So it's very important that you do know how to solve inventory valuation to calculate the cost of goods sold and the ending inventory for all 4 inventory valuation methods. Okay, so that is it for me for this lecture. I wish you a wonderful rest of your week. Please stay organized to ensure you meet all of the established deadlines. And until next time, have a wonderful rest of your day. Bye bye.